And just like that, we continue to see distribution, especially on the weekly chart, as we fully enter this bear market correction, whatever you want to call it, with another week finishing right at the lows. Hey everyone, my name is Richard Moglen. Welcome back to another stock market outlook video sponsored by MarketSmith. As usual, we'll cover the market indexes in depth, then talk about a few growth leaders, and then talk about sentiment from a few different sources, the IBD big picture article, and finally the wishing wealth GMI signal. And if you do enjoy my analysis at any time, please go ahead and take the time to leave me a like down below. It really helps me out and my channel. And of course, subscribe if you want to see more videos just like this one every single week. With that said, as I was talking about, this is a weekly chart of the NASDAQ composite. Once again, you can see 4 straight weeks where we end right at the lows. Definitely a negative look on this weekly chart. And we did have this one stall week here on a decently high volume. And you can see we were unable to retake that 40-week moving average in black, which on the daily chart corresponds to that 200-day moving average. And right now we're just in a downtrend below the declining moving averages. And right now it's just a waiting game, waiting for that market to resume the uptrend, waiting to see those setups reappear. And that's when we can get aggressive. But I do want to reemphasize that a correction of this magnitude is going to create some amazing rallies coming out of it. All you have to do is look at 2018 and 2020 as the most recent significant corrections and see the super strong rallies out of those. But we have to be patient, preserve both our financial and mental capital, so we're ready to take advantage of those opportunities when they do come. So with that, let's move on over to the daily chart, talk about that a little bit here. This Friday sold off very strongly into the close. It was on lighter volume than the previous up day, but very negative price action here. And right now we're just below those key moving averages, below the 21 EMA as well as the 50 SMA and that downtrending 200 SMA. So we are in a stage 4 as of this moment. And we'll have to see whether we can build out something here, maybe get a quick undercut rally of these prior lows and see what happens next week. We do have the Fed meeting next week, so that could shake things up as well. But once again, right now, the trend is down and we just have to wait and see what happens and wait for that trend to really change before we get aggressive. Move on over to the S&P 500. This looks pretty similar, but a little bit stronger. Once again, very negative action on this Friday, undercutting these prior lows. We're still above this level right here, 4,114 for the time being. And you can see the heavy volume, definitely some distribution here on the S&P 500. And we're below it, declining 21, 50 SMA, and now 200 SMA. And you can see this really started with this stalling action and then big downside reversal, fall through, short consolidation, and now once again, fall through to the downside. So once more, the current trend is down on most of these time frames, and we have to be patient, wait for that basically consolidation, fall through day, confirmation of a new uptrend before we get aggressive in this market. And right now, the best place to be really is in cash or in short positions. And moving on to the IWM, the Russell 2000 ETF, you can see we're in a downtrend here below a declining 21, 50, and 200 SMA. And on this Friday, once again, we're seeing very heavy distribution on higher volume than the previous day, and we're undercutting all these lows, making new lows. So we're just in a downtrend as of this moment. Taking a look at small cap growth in general, we've got the Russell 2000 Growth Index. This looks pretty poor, below declining 21 EMA, 50 SMA, and 200 SMA. And like the IWM in general, we've got basically it undercutting the lows as of this moment. So this, like the other indexes, needs time to basically bottom, get back above the moving averages, and then we can potentially see a new uptrend form. Looking at the FFTY, the Innovator IB50 ETF, this tells a very similar story here, undercutting these lows earlier on in the week, below declining 21 EMA, 50 SMA, and 200 SMA. So growth stocks and stocks in general really are just not the place to be as of this moment if you are long. So with those indexes covered, let's take a look at some leading growth names. And of course, let's go ahead and start with Tesla. Very negative action on this day, breaking that 975 level that had been holding. And this weakness really started with this big, basically failure of a breakout here on that earnings day where we had that gap up and then basically a sell off into the close. It was holding up decently well, but then we saw a break of that structure. And now it's losing that 200 SMA, and we'll have to see whether it can recover that going into next week. But we're decidedly below that 1,000 level, and we've got a lot of work to do to get back above that 50 SMA and get back above a rising 21 EMA. Moving on, let's take a look at NVIDIA, another large cap leader. This is in a downtrend below declining 21 and 50 SMA, as well as a 200 SMA, which might just be tailing down now here. It's flattening for sure. And we've got an overall RS rating of 51. So this is definitely underperforming most stocks in the market, which is not really what you want to see from those chip names. AMD as well, also in a downtrend below declining 21, 50, and 200 SMA. Bring up some of the smaller names. We've got GFS, which is trying to, form a little bit of a higher low here compared to these lows here. But once again, very negative action on this day, downside reversal against that declining 21 EMA. And this looks like it needs a lot of time. AOSL, another name to watch. Similar action, holding that 200 SMA for the time being. RMBS, let's bring up that chart as well. And you can see this below that 200 SMA, and we're below a declining 21 and 50 SMA. So these need a lot of work to do. Going over to the names that have been leading, let's take a look at Oxy. This is holding up better than most. We're holding that rising 50 SMA, but we've got that downside reversal today, and we'll have to see whether this key level holds. Going over to a weekly, it may be a little bit short-term extended here, but we do have a decent closing range on this week. So the structure isn't completely broken. I would say the bottom of the base is right at this prior low, and we held that. And I'd love to see us kind of reconfirm to the upside next week and maybe start a new uptrend here, getting through these highs or getting close to those highs and building some basically structure, tightness, and a pivot to trade against. Bringing up CVX. Another name within this list is a little bit weaker, but we're forming a stage 2 flat base. Going over to the daily chart, you can see this is definitely weaker than Oxy. We've got that gap down, and we're unable to hold that 50 SMA on a closing basis. Also looking at ExxonMobil, this is a little bit higher within its range. So this is better than basically CVX, but still we've got negative action on this day on higher volume, but we are holding these lows as well as the rising 50 SMA. So we'll have to see whether these are able to firm up. Moving on over to the fertilizers, let's bring up MOS, and you can see it's once again at 50 SMA and big downside reversal outside day on this Friday. And looking at some shippers, we've got Zim here, which looks like it's building a base below a declining 50 SMA and 21 EMA, but we did have a big reversal here and a move up into the end of the week, but a negative day on this Friday. So we'll have to see whether this continues to form out an overall base or we kind of restart the uptrend and have a visit with that 200 SMA. Moving on, we've also got some names that were acting well. SIMO is a name I was watching. This got really taken to the woodshed here. So any stocks that were really holding up definitely got hurt this week. And we definitely have to cover Google, Amazon, Apple, all those names. You can see very negative action, downside reversal here. And that basically started this downside reversal here, basically started this downtrend below declining 21, 50, and 200 SMA now. Definitely a negative look for this stock as well as the overall market in general. We've also got Amazon, which had that gap down on earnings on huge volume. And we'll have to see whether this can stick or whether we start to see a continued downtrend from here. Looking at Apple, this is holding up better than most of these mega caps. But once again, a downside reversal outside day on this Friday, right up against this 200 SMA and below it now, as well as the 160 level. So we'll have to see whether this can hold the 150 level as well as this overall low 150.10. But not great action here. And you can see the high volume as well after reported EPS. Also bringing up Netflix. Let's take a look at that stock. You can see that we're just in a downtrend, 2 gap downs now. Not something I'm really interested in. Facebook did have a gap up on earnings, but is still just in a downtrend below a declining 50 SMA, 21 EMA, you name it, as well as, of course, being in a stage 4 decline below a declining 200 SMA. So these are not leaders in the market. And also bringing up Google, if I haven't yet already, just basically in a downtrend below declining 21, 50, and 200 SMA. So these stocks need a lot of time, and the new leaders will be basically names that we've never heard of before, most likely in a group that we haven't really been, focused on too much over the past 2 years. A lot of the prior leaders in 2020, let's bring up Roku, have gotten hit very hard and continue to be basically distributed below declining 21, 50, and 200 SMA. Let's also bring up SQ, Block. You've also got UPST and also Shopify. All these are just in longer term downtrends. And if they are going to resume their uptrends or longer term uptrends, they're going to need to go through the full stage 1 basing process, then start a stage 2 if they do so. And that process can, take years. Let's just bring up SQ once again and bring up a weekly because this has had some basically huge runs in the past. Let's actually zoom out to a monthly, and then you can see that it can underperform the market for years. So don't get hung up too much on the names from the prior cycle. Look for new ideas breaking out of early stage bases near the new all-time highs. Those are the names that are going to be, the next monster stocks that go up and double, triple, and quadruple from there. And because of that fact that the names that are going to be the next model book stocks are kind of unknown to us as of this moment, that's what kind of makes this time period really exciting, because even as the market is selling off, These stocks that are going to be the next true market leaders are being accumulated subtly by institutions. And we basically are in a treasure hunt right now. We've got to, look for those clues, look for the evidence that stocks could be leaders, and just look for, that subtle accumulation that can point us in the right direction, that relative strength. And it's really a fun treasure hunt that we get to basically start now. So once the market does resume a full uptrend, those stocks are going to be there. Those opportunities are going to be, everywhere pretty much. And we just have to be patient, keep doing our homework, keep doing basically our scans, and be ready for when that time comes. So with that, let's move on over to sentiment and start with my Twitter surveys. So overall, we saw a subtle actually increase in bullishness, which really surprises me considering how we closed the week from 25.4% bullish to now 29.9%. This is still nowhere near those kind of March 2020 lows here. I think that was 17, 18%. So still a lot of people who are optimistic, even given the overall market backdrop. Looking at the name exposure index, we saw a drop. And you can see we're at 46. I'd love to see us get down in the 30s, 20s even, and we'll just have to see and keep watching that number. Moving on to the put call ratio, we definitely saw a jump, but we're still not seeing that big move to 1.15. I'd love to see that maybe on one final flush, we do get it. And lastly, we've got the bulls versus bears poll, which is basically oscillating back and forth, and it looks like the bears are just below those bulls for the time being, but we'll have to see where basically the next when the next numbers come out. So that pretty much covers it in terms of sentiment. And moving on now to the IBD big picture article, the headline is stock market correction gains steam ahead of key Fed meeting. Amazon crashes 14%. Reading through, discuss the action in Amazon, Apple as well, some Chinese stocks here, and also the overall distribution that we're seeing on the indexes, as well as the Market Smith Growth 250. And overall, we've got some names here in the fertilizer group, which are seeing some distribution here. And overall, their take is a market correction. Leaders up in volume, LNTH, definitely a name I'll still be watching here. And you've got some leaders down in volume as well. Lastly, we've got the wishing well GMI signal, which is currently red since April 12th. And on Thursday, the GMI score was a 0 out of 6. So overall, my current stock market outlook is a market correction, just like IBD. And we'll just have to wait and see and be patient for when that market does resume the uptrend, where you see those setups kind of appear out of nowhere, where those bases are forming right near all-time highs, and we're just not there yet. We're still kind of in that flush phase, but keep an eye out for those stocks that are bucking the overall downtrend and are trying to fight it and are starting uptrends as the market is still declining. Look for that divergence, and those are going to be names that should be high up on your list to buy if we do get that confirmation of a new uptrend. So overall, I hope you guys enjoy this video. Remember to be safe, manage risk, protect that financial and mental capital. Leave a like down below if you did enjoy this video, and subscribe if you're new to the channel. And I'll see you guys in future videos. Thanks.